Funded Today Nation, welcome back to the Funded Today podcast. Today, we are venturing briefly beyond crowdfunding to talk about investing, specifically how you can start your own profitable investment fund. And for that, we're going to interview our very special guest, Bridger Pennington, a serial entrepreneur. I always like to say that about myself, probably like many of you as well, who became a highly successful investment fund manager. His story is incredible. You're going to love it. I personally invest in his debt fund, full disclosure there, which is currently yielding monthly returns of over 2.5%. So today, I want to talk about how you can replicate that success and apply some of the lessons that Bridger has learned in his life to whatever you're trying to do. So let's get started.
The Funded Today podcast is brought to you by fundedtoday.com. Funded Today is a premier marketing and video agency. From startups to crowdfunding to Amazon and beyond, Funded Today has helped their clients generate hundreds of millions of dollars in revenue. If you'd like help launching or growing your business, visit www.fundedtoday.com to speak with one of their experts.
All right, welcome back to the podcast. I am Zach Smith.
And I'm Thomas Alvord.
And today we have a very special guest. Now, before I introduce him, I just want to bring up a couple things. Lo and behold, the day has come. Funded Today, the book, is completely finished. It is nearly 400 pages, but it is gold. I will stand behind this book and say it is the best book ever written on rewards-based crowdfunding. It might be one of the best business books ever written. I'm sorry, I'm going to stand behind it. Taken us nearly 4 years or so. It is done. It is in the press. We're putting the ISBN on it today kind of thing. So get ready for that. One more thing, and Thomas can talk about this briefly. We have actually began a partnership with the guest on this podcast today to put together our first crowdfunding course. It's called Crowdfunding Secrets. Thomas, you want to tease that?
So for the last few months, I have worked internally with our own video crew. We have been putting together a course on how to crowdfund A through Z. So not only do you get so much of the content that you also get in the book, but also we take a deep dive and go over marketing, product ideation, launching, etc. So if you want to know the crowdfunding secrets from the crowdfunding kings, keep an eye out for our new course coming out, the Crowdfunding Secrets.
Really excited for that. If you're interested and you want to get on the early bird, you can send us an email, support@funded.today. Leave a comment on the podcast. Let us know. There's a lot of ways to get in touch with us. That's going to be launching here pretty soon. All right. Now, with no further ado, I want to introduce today's special guest, Bridger Pennington. Here's a little bit about Bridger. Bridger knew from his freshman year at BYU in 2016 that he wanted to be an investor, but he needed money to invest. So he tried a series of 7 business ventures with mixed success until a mentor finally taught him how to start an investment fund. So he founded Black Bridge Holdings and then launched his first fund in 2016, raising $46,000 to invest and earning a 64% return on it. He since started a second fund and is working on a third. Over these last 2 years, he's done 290 deals in 38 states. As 2019 ended, he founded Investment Fund Secrets to help teach others exactly what he did to start, build, and scale investment funds without having an Ivy League degree or working on Wall Street for 15 plus years. And since then, he's attracted 250 students who have raised millions of dollars launching their own funds. He's making a lot of money too. And today, we've had him on this podcast to teach you some of those secrets as well. So Bridger, welcome to the show. Glad to have you.
Zach, Thomas, good to be here. How you guys doing?
Doing really
great.
Well. So Bridger, we don't like to mess around here. Tell us your story. How'd you get started?
Yeah, so I started out, like you mentioned, I was at BYU. I knew I wanted to start a business, be like you guys one day, have some successful businesses. And you guys are a few years older than me. And so I went to work. I started on these business ideas and I wanted to be an entrepreneur, not just so I could have a cool Lamborghini or something, which would also be cool. I don't have a Lamborghini yet, but I also wanted to have money that I could pay for like family medical bills, or I don't know, I thought it'd be cool to like buy a car for someone, or just be that type of person that could hire family members, which I'm sure you guys have felt that after running a business. And so I went on this journey. I set up 6 businesses in my first 2 years of school. And these weren't like business ideas. These were legit businesses up and running, making money. We had a Chinese tutoring business. I had a landscaping business. I had a business selling essential oils. We were building websites for people. I did real estate wholesaling. I mean, like any business under the sun, I was going after. I was just doing stuff.
And you dropped out of school, right?
Well, I was in school at the time, so I was taking
Well,
classes.
I know, but how do you run so many businesses while you're still in school?
So those were about 6 months a piece. So I would spend like 6 months doing the online marketing thing. I was like, well, didn't work out. Let's try another one. And I went and they kind of overlapped a little bit. And it was school and business, like all day, every day. That's what I did.
Man, you put the whole idea of like pivot, fail fast on its head. It's freaking beautiful. I thought I was crazy.
The books, like Fail Fast, Fail Cheap. You have like all these different entrepreneurial books. I tried to live that as best as I could and just go after models. And finally, my dad
weren't even failing necessarily, right? I mean, you just
I wouldn't say failing. They were I mean, like the Chinese tutoring business was great. I had 11 tutors working for me, all college students, but I was making like $6 a lesson because our margins were just so thin.
Yeah.
And I was like, well, this doesn't work. Like, you know what I mean? Like all 11 teach one lesson a day. Okay, I made like 60, 70, $80 maybe, you know? And it just
but what if you scale it? Because that's just one town there. What if you scale it and you have 100,000 people teaching all types of languages, and you have a $6 margin, let's call it a $5 margin, and you're making $500,000 profit.
You saying you got a good business idea here, Thomas?
I'm just saying,
Thomas. No, it's a great question.
I like it.
The reason I'll kind of into my story is I started to look at vehicles way more than I did before, because I was just doing anything to make me money. And I started to realize there are, as you guys know, different business models and vehicles that some of them can make you a lot more money than other. Like if I was, for instance, the best concrete layer in all of Utah, right? Number one, like I worked for 30 years, became this incredible concrete layer. There's only so much money I could make, right? There's a cap somewhere, right? And it's still a decent salary, decent wage, but there's some kind of cap versus if I did a different vehicle, like you guys, raising money for Kickstarter campaigns, like the margins are a lot bigger. It's easier it's just a different vehicle. And that's where I eventually stumbled upon running a fund. And so anyways, Thomas, that's kind of I was just shopping vehicles, essentially dating, dating vehicles. Yeah.
And what I hear you saying is it's the TAM, right? As some people call it, the total addressable market or the total available market, right? Here is your revenue opportunity. How big is it? How big is the market, right? And so looking at, concrete laying or landscaping or teaching another language, what's that market size? What's the TAM, the total addressable market? And so it sounds like you had bigger ambitions.
Yeah. And I thought if I picked a better vehicle, I could even be worse. I could be, just okay at it and still make more money than someone who's, the best concrete layer, back to that example. So my dad, I have this incredible father. I'll talk about him in a minute, but incredible mentor for my life. He's been an entrepreneur his whole life. We lived in kind of just an average household. He drove a crappy car. And that's what gave me the entrepreneurial spirit was from him. And he finally grabs me and goes, Bridger, you got to go meet with one of my business partners. This guy I think can help you. I said, okay. He says, you're kind of like a chicken with your head cut off, because I really was. And so I set up this meeting. I drive up to this guy's house. And I put it in my phone. I've never been there before. And I pull up to this gated community. I'm like, and I pull in and there's these beautiful homes. I start driving up and I pull up to the top of this hill and there's this beautiful, gorgeous white home. It almost encompasses the entire cul-de-sac. It was just huge. And I parked my car and I double checked the address. I was like, is this really, this is my dad's business partner? Like, who is this guy? And I get out of my car. And I remember walking up to the big door. There were like these 18-foot oak doors. And I was a little bit nervous. I kind of knocked, and I didn't know if like a butler was going to come and be gone, peasant, get out of here kind of a thing. And a little bit nervous. And thankfully, my dad's partner, though, answers the door. He goes, Bridger, come on in. We come and I sit down on these massive white couches. They're just like encompassing, right? Like huge, just beautiful home. And we started to chat about business and life and things. And I finally get to the point, I go, honestly, how did you get all of this? And I kind of pointed at his house like this, And he kind of laughs, goes, Bridger, actually, a lot of people don't really ask me that question, like ever. And I go, really? Like, I would think, and I'm just young. I'm like 20, 21, 22. I was like, oh, I thought everyone would ask you that question, but I guess I don't, it's not appropriate. And he said, well, he goes, I was a lot like you. I know why your dad sent you to meet with me. He goes, in my 20s, I started a handful of businesses. They did okay until I figured out the secrets of the wealthy. I was like, what do you mean? He goes, this is what some of the wealthiest families in the world, this is what they do. They all run investment funds. And I was intrigued. I goes, what's an investment fund? He goes, the way I learned about it was I was running these businesses. I met a guy and he had this unique job where he did kind of a tax and accounting for different clientele. And his clientele, he had done very well. And he had on one of the wealthiest streets in Utah, there was like 15 houses. He did 11 of the 15 houses. He knew all of their taxes, accounting, everything. And he goes, you know what's funny? And these houses were huge. I mean, 15, 20,000 square foot houses. And he goes, what's funny is there's a guy on that street. He doesn't live in the biggest house. He's about 4 houses down, a little bit smaller, still a massive house. And he goes, that guy makes about 10 times more money than everybody else on that street. And my dad's partner was just intrigued. He goes, what does he do? He goes, well, he runs a fund, an investment fund. And in basic terms, an investment fund, what that is a pool of money that investors put money into, and someone as the fund manager gets to manage that pool of money and make investment choices. And when those investments make money back, the fund manager and the investors take a split. And that's why some of the wealthiest people on the planet run funds. You see, like Ray Dalio took home $2 billion last in 2019 alone, right? These fund managers taking home huge amounts of money. And so my dad's partner said, I don't care how long it takes me, I'm going to figure out what a fund is and how they work and how they run. He goes, it could take me 2 years, 5 years, 10 years. I don't care. I'm going to figure it out and do it. And he goes, right now, me and your dad launched a fund. And at the time, they managed about $8 billion of real estate, which was huge, right? If you follow like Grant Cardone online, Cardone Capital, they manage about 1.1 billion. Okay. So they're about, at the time, were 7 times bigger than Cardone Capital. Now they're up to, in 2020, the data that's growing, they're up to about $20 billion assets under management. And I was like, my dad, like, this is what we're doing. He's like, yeah. And so we started to chat. And I'm like, hey, could you be my mentor? Can you teach me more about funds? I'm so intrigued. I would love to do this. He goes, well, you should go talk to your dad. Your dad knows way more about this than I do. And I go, well, hold on. My dad drives a crappy car. We live in a small house. Like, I want to learn from you, right? You're like you're really rich and successful. He goes, actually, me and your dad make about the same amount of money. And my jaw about dropped to the floor. I was like, what? And he goes, yeah, me and your dad both kind of started this. We're both about equal partners in the business. And I left that dude's house. I drove straight to my dad's house and I was like, Dad, what the heck? Like, what is going on? Like, we've been living like this. Well, you drive a crappy car. Like, I can't order a soda at dinner for the last 5 years because it's too expensive, right?
That's so funny. Bridger, that's so funny because that's how I was growing up. No joke. I would go out. We would go to Taco Bell because it was the cheapest place to eat. We'd go there like 3 times a week and we could only get stuff on the 59-cent menu item. And we would buy 2 drinks to share with like 8 or 9 of us, right? Because you get the free refills, right? I totally get what you're saying.
And did your parents had money and they just kind of hit it?
Yeah. I mean, my dad's done well, but then again, it's always like this. Well, has he done well because he knows how to be frugal, right? That's one of the things I learned about Zach. And other people complain, oh, you guys are tightwads. Why don't you spend money? It's like, well, unless you know how to be super frugal, you'll just go spend money everywhere. And one principle I've really learned and appreciated from Zach is that how you operate in the small things, you operate in the big things, right? And so you got to be frugal in the small things. Otherwise, you're not going to be frugal in the big things. And if you're not frugal in the big things, your money could go poof and be out, be gone. I mean, I've had people, even my neighbor where I used to live, hey, why do you live in such a small house? I mean, it was 3,200 square feet, but he's like, I know you make way more money, blah, blah, blah. But it's like, I don't want to overextend myself. I don't need to. And, it'll happen if it happens, right? But anyways, I find that, I mean, obviously, as we chatted before this, I know your dad, and that's kind of humorous, right? But
you touched my heart, Thomas.
Yeah. And looking back, I really respect him for that. And I mean, he said, hey, I wanted to raise kids that understood the value of money. I didn't want to overextend myself. And that's what I've found with most successful entrepreneurs. I mean, you see the guys on Instagram that float all their stuff, but I'd say the majority of people that have money tend to be more frugal and save money. Like both you guys, I know you guys aren't that, don't live these extravagant lifestyles, even though you could. And it's funny, those principles are, I think, what helps people launch good businesses.
Well, and what's interesting too, and I like to just kind of piggyback off some of the ideas and share some thoughts as people are listening to maybe have some additional valuable take homes potentially. One thing, if you look at wealth, most wealth is first generation or second generation, right? Especially if you have like these foreigners who come here to the United States, or I suppose it could apply to other countries, but from what I've read and seen, like, you have somebody from overseas, you have someone from Russia, they come, they they live here in the States, right? They start up a business, they become wealthy. And once you get to the second or the third generation, they lose that. And because there's this mentality of work ethic and frugality that you don't get. And I find it interesting because your dad has been astronomically successful, and he started his fund 12 years ago, right? So he was doing other stuff. I don't know to what degree of success, but it seems like a lot of, he's really hit his stride in the last 5-10 years, and their funds have just done phenomenal. And so looking at that in a sense, it's like when you don't inherit it, when you work toward it, it's going to be different. You're going to value it different. You're going to treat it different. So
yeah,
a lot of pressure on Bridger now to live up to.
Yeah. Which is great, and it's been awesome. And I actually really appreciate my dad for what he's done. And so I kind of, back to the story, I go meet with my dad, and I talked to him about his funds and everything, and he has all this I guess hidden money, right? And he lives the millionaire next door kind of lifestyle. But we started to talk about investment funds, and he sat down and taught me how investment funds work. This is venture capital, private equity, hedge funds, how they're structured, how they file the SEC, how they raise money, the whole 9 yards. And I was super intrigued. And this is how some of the wealthiest people on the planet make money. So I said, well, I'm going to go after this vehicle. I'm going to start looking through this vehicle and figure out a way that I can start a fund. And lo and behold, I thought about one of the previous companies I worked at, that some of their clients needed these short-term financing loans. And I worked there. I thought these were relatively safe. They would do well. We could get good returns. I went and talked to the owners of that business. They loved the idea. And I thought, oh my gosh, I think I have a fund on my hands. I could do this. So I went and met with my dad. We sat down, planned out the entire fund. He, helped me structure it, get things together. Legal docs are expensive. We did a few things there to get around that. And we got everything ready to set up my fund. And I was excited, but the one thing you need for a fund is money, right? That's like the definition of a fund is you need investors. And so I was thinking about it. I said, my dad is rich. He doesn't spend his money. He likes to invest. I'm his son. He loves this business idea. My dad will be the best investor ever for my funds. And so I'm 22 years old. It was a late Sunday night. And I remember deciding I'm going to go pitch my dad to invest in my fund. So I went into his office, his home office, late Sunday night. We sat down, and in my best pitch voice possible, I'm like, "Hey, Dad, how would you like to be our first investor in our fund?" And he kind of laughs at me. He goes, "Bridger," he goes, "I have the money to invest, but if I invest in your fund right now, I will ruin the experience of you raising money on your own." He goes, every fund manager needs to learn how to raise money. If I give you money now, it'll give you a crutch, and it'll give you that first initial investment is usually the hardest. And he goes, it'll be detrimental to your growth. And he kicked me out. And it was kind of a tough love moment between me and my dad. But I took him up on the challenge. I hit the streets, and I talked to anybody I knew. I mean, former bosses, college professors, anybody. And I was able to raise, my first fund was a whopping $49,000 I raised in my first fund. But it was enough to get started. We were doing these loans were about $5,000 to $7,000 a piece. They were small. And we started to flip these loans. And our first initial investors, those 6 investors, I got them a 64% return on their investment. And it did really well. And since then, we launched our second fund, and we've grown a lot since then. We've gained a lot of investors and a lot of traction. And I've hired
teams. Still not in your fund, right? From what I've seen.
And to this date, my dad has never invested in any of my funds, any project, never. My dad has never, and I've pitched him a few more times. And, but I'm looking back, I'm so grateful he did that, because it's taught me principles of how to raise money, how to find investors, how to negotiate, all those things that are just life lessons. And I respect my dad a ton. He's my greatest mentor. He's really only given me advice and mentorship, which has been incredibly valuable and useful to go out and launch our funds. We're actually looking at launching our third fund here pretty soon.
Bridger, nice. What I would say is what your dad has done is provided such good mentoring. And I'm sure he would have loved to put money in, whether your fund worked or didn't. It would have made no difference to him if he lost the money or doubles his money. Probably didn't matter at all. But he was doing what was best, right? And pushing you forward. And it's so important. It's so important for people to have a mentor, whether it's a friend, whether it's a family member, whether it's somebody else you go and reach out to. I know somebody who literally talked to people, found somebody, said, "Hey, I want to shadow you for a month," and literally just shadow them or help be their secretary, right? You got to find a mentor. And I mean, you've had a great mentor there, Bridger. So
I totally agree. Yeah, that has been crucial. And still to this day, my dad is amazing at strategy and how to negotiate. I mean, he's just incredible. He'll answer anytime I call to be a mentor. Never will put money behind it, but always will give I respect him a lot for that. And he's done very well.
Now, Bridger, our podcast is all about making money. The name is Funded Today.
Yeah.
Get your next big idea funded today. So I think a lot of people would love to know how to make money. We talk about it all the time. Do you have a story? One of, from all the money that you've raised of what you did, or some cool little tidbit that you could share about, hey, I want to raise money. I mean, a lot of people on our podcast want to know how to raise money for a product idea that they've invented. It might still be in their head. It might be written down on a napkin or a piece of paper or something, or maybe it's a little further along and they have a prototype and they have some product and they want to know how to sell it. What advice would you give to them?
For on the how to raise money side of things?
Sure.
Yeah. Great question. I get this a lot. And now we have a, podcast stuff. We share this with a lot of people. And I've actually been able to see a lot of entrepreneurs try out different models and techniques how to raise money. And this is what we found has been very useful. First thing I would say is don't do it alone. With anything in life, and you can either work your way in or buy your way in with things. And with money raising, if you were just, and this is, I'm talking about, going out and raising money from accredited investors, very wealthy people, high net worth people. You got to raise millions of dollars. If you are naturally just introverted, don't like to talk to people, you don't have a network, that's okay. You don't need to do everything inside the fund. Like my dad's funds, for instance, great example. And most funds, I would say, have 3 distinct circles. So circle number 1 or position number 1 is your expert investor person. This person is amazing at, real estate loans, or for me, it was loans, or trading on Wall Street, right? Mm-hmm. Typically, those people have no clue how to manage a fund, how to file with the SEC, do legal docs. I would say that's bubble number 2 is fund management. And then the third bubble is the money raiser for funds. And so my dad, he realized, he said, hey, I'm very good at operations. I'm very good at fund management. I do not have the network. I mean, he said, I can raise some money. I can't raise big money though. So he went and found a partner. And his partner is the guy who I went to his big house. That was his partner, original partner. And he's been able to raise hundreds of millions of dollars for them from high net worth people because he already has built the network and just doesn't know who to connect it with. So that's the first thing I would say. If you're not naturally connected, there are people out there right now begging, like looking anywhere they can for yield. They are looking for you. They're looking for good investments. They just need someone to connect them to, right? So I would say that's the first thing. There's plenty of people looking for you. There's plenty of money in the world. And then finally, I would say this is, and this is one of the biggest problems I had was I'm too young, right? I was, at the time I was 22 years old. And I just kept telling myself, well, I'm too young. No one will believe in me. I don't have a track record. I don't have the stuff it takes to be a fund manager. No one will believe in me. And I had a mentor sit me down once and he said, Bridger, you need to lean into your constraints and use your constraints to your advantage. Because your whole life, someone's going to tell you you're too tall, you're too skinny, you're fat, you're too old, you're young, whatever it is, they're going to tell you what's wrong with you. And you have to figure out why that actually leads to your advantage. So for my investors, what I did was I knew they were thinking I was too young. So I would be in a pitch room. I'd be sitting down. And Zach, you're one of my investors, right? You probably heard this pitch. I would sit down with Zach and say, Zach, hey, here's my fund idea. I've got this great idea, blah, blah, blah. Here's my pitch deck. We're going to make so much money. And I would stop and say, I know you think I'm way too young to be sitting in front of you right now. And 9 times out of 10, they'd kind of nod like, yep, yeah, that's exactly right. And I would go, let's talk about that for a second. Because I'm young, let me explain to you why that helps me in this fund. And they're kind of intrigued. Like, what do you mean? I said, well, if I was, let's say I'm 55 years old and I've done well in my career and I want to start a fund. Okay. My fund, I'm going to try to take as many fees as I can from you. I'm going to try to nickel and dime it because I'm older. I got to make money for myself. Also, I like to take my family to Hawaii twice a year. I don't work late nights because I like to watch Netflix. I've got this lifestyle. I'm an old dog and I'm stuck in my ways. And I go, because I'm young, I can wake up early. I can work harder. I live in a $300 apartment. My car's paid off. I have no reason to commit fraud against you. And as long as I can cover my $300 apartment rent, like there's no reason for me to steal money from you. If I was 55, I had a big mortgage payment, big car payment, I might want to steal money from you. And then finally, because I'm young, I'm trying to build a track record for myself. I say the purpose of my fund is not for me to be a multi-millionaire, billionaire on my first fund. My goal is to get my investors the highest return possible, because I know you are going to go tell all your friends how great of an investment you had with Bridger.
And Bridger.
Yeah.
Literally on that point, what did I do? I talked to the people in your fund and I asked them, and the one that I talked to specifically that I remember very distinctly was exactly that. He's like, I'm like, so are you happy with it? He's like, what do you think, Zach? I'm like, what do you mean? He's like, have you ever heard of this amount of a return on anything you've ever done before? I'd be happy with 8%, you know? And I was like, you absolutely under-promised and over-delivered, essentially, you know, exactly the way you needed to do. And you created that great track record, and now you're attracting capital all over the place for future ideas.
And that was the original strategy. And we're launching our third fund here pretty soon. We already have, I would say, probably $7 to $8 million of soft commitments to come into this new fund once we have it launched, everything. Mm-hmm. And we're hoping to raise $75 to $100 million for this fund. And so that's what I told investors. I leaned into my constraint of being too young. And that goes not just for raising money, but for, I think, anything in entrepreneurship is lean into those constraints. I have one friend. We grew up together her whole life. She has 2 million followers on Instagram for fitness. Done one of the top fitness girls on Instagram. She's done very well. And her story is, it's not, I was born with a 6-pack. I've always been ripped. Her story was, I had 2 kids. I was overweight. I tried diets. They didn't work. I lost 5 pounds. I looked the same. And then I finally said, I'm going to put on muscle. And she put on, I think, 20 pounds of muscle and looks way better than she did before at the same weight. Like, she has 2 pictures. Like, she weighed 145 and then a year later weighed 145. But in like the pictures, she looks just ripped and just completely different. And so that's her story.
Can we give her a shout out? Who is it?
It's Kelsey Wells. That's her name on Instagram.
Okay.
She's done and you can go see her story. It's incredible. She's been on all these shows around the world and all this stuff. And women attract to that story. Like, I've tried all the diets. Losing weight doesn't work. Let's put on muscle and actually have healthy bodies instead of trying to, starve ourselves to death. And it's a pretty cool thing. And so she did the same thing. She leaned into her constraint of, I'm overweight. I'm a mom with 2 kids. Like, she leaned into that and used that to her advantage. I say the same thing for raising money. Lean into your constraints.
Yeah, that's powerful. I love it. Now, Bridger, I think a lot of people at this point listening would say, okay, great. This is awesome. I think I can raise some money, but what do I raise money for? How do I even know what to create a fund for? I mean, real estate quickly comes up. Obviously, what Ray Dalio has done in terms of the stock market and hedge funds comes up, but what exactly can you create a hedge fund? What exactly can you create a fund for?
Yeah.
How does somebody come up with an idea?
I actually, when I first kind of dove in, I didn't know the possibilities for funds. Just to give you a few ideas of different funds that I actually work with and know about right now. So obviously you have the traditional, you see like a Shark Tank show. Mm-hmm. There are funds that do that exact same thing. They're venture capital or seed funds is what they're called. And they'll do these small investments. You see real estate funds, they buy and sell real estate, like Cardone Capital is a great example, or my dad's funds. You see these hedge fund traders, they trade commodities or futures or bonds, whatever they're doing. There's Forex funds. There's funds that do cryptocurrency. There are funds. I have one friend, he runs an almond farm fund. All they do is buy and sell almond farms. They said, we found this great yield. We can do very well in almond farms. I have another friend, all he does, literally, this is all he does. He goes around to funeral homes, mom and pop funeral homes, and he talks to them, and he buys up these funeral homes, 10, 15, 20 funeral homes, groups them together, and he found that he can sell those companies to a bigger firm for about 2x what he purchased it. So if he spent $10 million acquiring the companies, he can sell them for about $20 million on the public markets. That's all he does. And then he sells them and he goes and restarts and he buys a bunch of these mom and pop shows, puts them under one roof and packages it together and sells them for more. Funds are useful for pretty much any idea you believe you can scale, but just don't have money to do it. And if you think,
Bridger, is you didn't share this in your pitch, but there is something I think that is valuable for all of the listeners to know and understand here. And it's this: the larger the fund, the market that a fund is able to play in changes, right? Mm-hmm. And so your friend who's able to go up and buy these small funeral homes, well, there's no reason that other companies on the public market couldn't do that, right? it's just not worth their time because it's such small potatoes, so to speak. And so somebody who's starting out can be more lean, can do activities and investments in markets that other players might not be able to do. A lot of funds, real estate funds, big funds, billion-dollar funds, they're only going in the largest metro areas, right? Whereas if you're starting off, you could do different areas, you could do smaller deals, and you're not necessarily always going to be competing with the big dogs, with the people with the big funds, right? There's different niches within an overall market that people can operate in. And that is actually one of the advantages getting started, because you could have a fund for $500,000 or $1 million, and it would be a small fund, and some big fund manager wouldn't even look at it. But for you, it could get your feet wet and be the beginning.
Now, Thomas, you make an exceptional point. And to kind of follow Bridger's journey that he's just shared on this podcast, what was it, 46 to 49,000? Then you have your fund now you're raising 6 to 10 million soft commitment, potentially getting up to 75 million. So look at the progression there. It's baby steps, it's daily improvement leading to eventual something bigger and bigger and bigger. And then kind of to bring this back to crowdfunding, you have a project, you launch that project. Now you go find similar projects in that niche. You buy out all those companies for probably, a couple $1,000, $200,000 max. And now you have all of these companies that support your existing product, and you bundle that together and you continue to attract investors. So I really like that idea of kind of, buying up your market. Thomas and I even did this a little bit with crowdfunding. I mean, truly, we own quite a few different entities within the crowdfunding circle. And we started with Funded Today, and now we have a lot of different referral agreements or partnerships or ownership interests in lots of these other different companies in the sphere that we play. We've never sold. We had a pretty good offer, but we turned it down. And I love that. I think that's a perfect way to kind of approach anything. Don't worry about raising $100 million. Go raise your first 50,000 for something, and then move on from there.
I love it. Yeah. Last thing I'll add on that, Thomas, what you were saying about the different markets, you could have a fund in the same city as Ray Dalio, right? And doing the same things, and you wouldn't even compete against each other for investors. Ray Dalio's funds, you have to have a $5 billion with a B, $1 billion net worth to even talk to them. And minimum commitment is $100 million for their funds, which is wild, right? So as funds grow, they move out of markets, and then they are replaced by entrepreneurs like us that fill those markets over time. Same with my funds. My first fund is done well. We're growing out of that market, and somebody else actually has the opportunity to come in and just replace that same niche. It's not like Facebook. Facebook has dominated their market, and you can't really repeat a Facebook, right? But in funds, actually, you can a lot of times repeat someone's model just because they have moved on to bigger and better deals, and you can replace that with investors and deal size. It's a pretty fun place to be at, and a space to play in with different market ideas and funds.
To make the point hit home even more with your dad's fund, that's the case as well, right? He used to take minimum commitments of a couple $100,000, and now he's probably a couple million.
Yep. And now all those guys that wanted to put $100,000 in, oh shoot, where do I go? Well, hey, come to my funds, right? Hey, I'll take your money,
That's awesome.
And it's a great way to do it.
I love it. All right. Now, here comes the next roadblock, Bridger, and I'm sure you got an answer for us. Okay, I know how to raise the money. Okay, I've got a really good idea for a fund. I'm going to go do the next almond farm. How the heck do I do this? What licenses do I need? How do I start a fund? I don't want to go to jail. Bernie Madoff Ponzi scheme? Come on, you know what I mean? Like let's deal with the elephant in the room. How do we avoid that and make sure we're running something legitimate, honest, fair, but then also make sure we have all the compliance dialed in? Yeah. And I know you're not an attorney, so you can't necessarily give legal advice, but give us what you know.
Yeah, not legal advice. Thanks for the disclaimer. But it's interesting with funds. That's usually the biggest question I get is, well, what about licenses, regulation? Which is, I'm in a perfect position to understand this. My dad is the chief compliance officer at his fund now. That's kind of the role and he's actually retiring here pretty soon. So he understands the SEC better than most people on the planet. My brother, who you know well, is also a securities attorney out of New York. He's at a $300 million fund right now. So I have securities law from him and my dad, SEC compliance. And so at dinner, we talk about, like Sunday dinner, we talk about funds and SEC compliance and rule. I mean, it's a fun conversation to be at, but pretty unique setting. And so, but yeah, back to what license do I need to get to start a fund? So not every fund, but most funds have two different types of fees that they charge. Now there's more, but just to put them in two buckets. on a timeline of returns. I'll kind of give you an example. If we got, for instance, we're targeting a 22% return for our fund. Okay. So you give me 100 grand, I'm going to try to get you back $22,000 as a profit, as a return. So how that's broken up, a lot of people will say, oh, well, there's 2 and 20 funds, right? And that means 2% management fee and 20% carried interest. It's a little bit more complex than that. So I wish I had like a whiteboard in front, but I'll try to explain over voice here. But typically in funds, they have what's called your pref, or preferred rate of return. So for my fund with you, Zach, it's an 8% pref. So I say the first 8% of all returns go to my investors. And that's called my pref. So if this year we make a 7% return, I take home 0, and Zach, you would take home all 7%. And then I say, so that's first 8% is called your pref. Next 2% for my funds, 9th and 10th percentile is called your catch-up. And that goes to me, the fund manager. So 9th and 10th percentile come to me as a fund manager. And then anything above 10%, we split 80-20. 80% to the investor, 20% to the fund manager. So if this year we got a 22% return, first 8% to the investors, next 2% to me as the fund manager, then 80-20 from 10 percentile to the 22 percentile, okay? And those are called performance fees, performance-based fees, because I only get paid if I perform, right? I have to perform, get a good return for me to make money. Now, is that making sense so far? You guys with me?
Yeah. So breaking down the math, 22%, you lose the first 8, and then you take 80%. So I would get 9.6, you would get 2.4, and in total you would have made 4.4% on that.
Yep.
Exactly.
And you would have made 17.8, somewhere around there.
Yeah, your math's better than mine.
So that's how the split happens. Now, a lot of people ask about management fees, right? I know a lot of funds charge these fees. Now, a lot of funds will charge an upfront 2% management fee that they take off the top. So in that scenario, you would take the timeline, it would be 2% to me first, and then you would take 8%. Now, every fund's a little bit different how they do that, but just to be simplistic, that's how they think about it. So my dad told me this. He said, Bridger, if you're going to charge a management fee, you need to have a license and set up a registered investment advisor, what it's called. So you have to have a Series 65 or a Series 7 because you are giving investing advice to the fund. Because there's a little kind of a loophole here. If you don't charge management fees and you only charge performance fees, meaning you only make money if the fund makes money, you don't need to have a license to set up a fund. You don't need to have a 65 or a 7 to set up a fund. And I was like, aha, that was like the coolest moment ever for me. So right now, I do not hold any licenses currently. I don't hold a 65, I don't hold a 7, and I don't plan to anytime in the future because I don't charge management fees. And my investors love that. I say, hey, Mr. Investor, Zach, you're an investor. I say, hey, I don't make any money until you make at least 8% first. Not like nothing. That's all I make is just performance fees.
And Bridger, I just have to jump in. That is so awesome because you get into these other funds and you really don't know what the return is, or even if you're looking at somebody else's case studies and their prior funds and how much they made, it's so hard to know what exactly happened. I mean, you run into issues with dry powder. Was the money deployed or not? Because they usually track the IRR just on the deployed money, even though the money might have just been sitting there. But then you also run into these issues with fees, and they can hide stuff. And that is actually so powerful that you don't have to get the license, any licensing, and that you can just go and you do it on performance. And that's how we actually started.
Yeah, Thomas, that's exactly what I was saying. I mean, that's Funded Today. I didn't even think of it that way, but literally Funded Today. Let us run your project 25 to 35%, and we'll take a piece of it if we're successful, and we'll take nothing if we're not.
Yeah, I think it's a great way to run a business, and you put your money where your mouth is. And I was able to gain money from investors, I would say relatively easily. And I've had too much money in our funds. We've actually been sending money back to investors because they love, that's just such an honest upfront deal to them, and they love it.
He's going to keep my money in there forever, right?
Yeah. And then another thing, just a caveat with this though, let me just clarify some things. So that's on the fund side. You don't need a license on the fund side if you run it that way. Now, if you are doing commercial real estate, someone on your team or you needs a commercial real estate license to buy and sell real estate. Or if you're going to be trading securities on the New York Stock Exchange, you need a license to be able to trade. But on the fund side of things, you do not need license. So just a caveat for those, people running out there, have a license to trade, but you don't have to have a license on the fund side of things, which is pretty cool. And the way that I was able to start my fund relatively quickly. And that's where we help a lot of our students and people I work with now to launch their funds and get them off the ground. Like you mentioned earlier, just do it, right? Just get stuff done. That's a fast way to just get moving and get in the process of launching and starting a fund.
No, that's perfect. That's great. Well, Bridger, how to start a profitable investment fund, parting final wisdom, advice, and maybe a little bit of how to get in touch with you too, because I'm sure a lot of our listeners are going to be very interested and they maybe want to sign up for your course, or they want to connect with you, or they've got different questions. What kind of advice or wisdom do you have, both from a business level, a personal level, and then just anything that you've learned from your dad, from your mentors, and then running your own profitable investment funds?
Yeah, I'll say this. And this is something my dad has drilled into me since I was, 4 years old. It was this concept. And he said, Bridger, and he goes, I think you guys could probably agree. Most people know someone who has moved here from Thailand or Mongolia or Korea, okay, or Cuba, and they barely speak English, right? They can barely even speak English. They moved to the United States, and within 4, 5, 6 years, they have a laundromat, they have a restaurant, and they have another business they're running, right? They have 3 businesses, and they can't even speak English. But because they moved to the United States, they saw the opportunity. They were able to flourish and do actually better than most Americans who have lived here their entire lives. And my dad just drills my brain forever. He said, Bridger, it is almost academic in America. If you wake up every day and you try and you stay healthy, eventually you will succeed in America. And there's the analogy of getting up to the plate and swinging, right? There are plenty of people on this planet that sit on the sidelines, that sit on the bench. They're on Twitter. They like to make comments or make fun of people or trolls, chat about the game, but they aren't in the game themselves. And I knew if I just got up to the plate enough times and swang the bat, just got up, I knew I would hit a single eventually and a double, and maybe I'm going to hit a home run. And yes, I'm going to strike out a few times, but at least I'm at the plate swinging. And most people in their life, they never step to the plate. And if they do, they never actually take a full swing. They take a little half swing or a check, and they don't go all in. And you interview people on their deathbed when they're 90-year-old, they regret, man, I should have taken that chance, or I should have started that business. And there is so much value in going and doing. And especially since we live in such an amazing country for entrepreneurship, where entrepreneurs are praised here, right? And rewarded for what they do. My dad he drills my brain. I've just internalized it and use it. Just like there's no reason I shouldn't take a chance on myself, because the last thing I'll say too is it is so hard to truly fail in America. Meaning if it all goes to crap, right? You lose all your money, whatever, there's bankruptcy, right? Mm-hmm. It wipes all your debts clean, right? Okay, that's a first safety net. You go even worse, right? You have Medicare, you have all these unemployment, you have so many safety nets to truly hit rock bottom in America, meaning like you're on the street, you're homeless, like it is hard to.
And you're young, like someone like Bridger, almost everybody listening to this podcast is young. If you're under 50, maybe if you're under 60, you're still young in today's economy.
Exactly.
You can make millions within 5 years. Like you have to have that patience. You have to have that mindset, but you can take an incredible amount of risk and still be okay. And I love your baseball analogy. I just did a little bit of a research. I'm cheating. I'm not this smart at baseball. So all of you stat nerds, sorry. But Ty Cobb is the best person in the history of the Major League Baseball Hall of Fame. And his batting average is a 3.66, 3.662. 36% of the time he got on. Nearly said 63% of the time he struck out or got, fielder's choice, got out, walked, didn't count, right? Whatever it is. I mean, and he's the best person in the Hall of Fame. So think about that.
Yeah, it's incredible. And I think in America, just it's low risk, high return. And most people don't think about that, but it is really truly asymmetrical risk of you can go risk it and you could be a multi-millionaire, billionaire. It depends on how well you do. And if, the worst case scenario, it's not that bad, right? Okay, you get a job working, at some restaurant and you can still pay rent. Like my rent's been $300 to $600 a month for my pretty much still till to now, right? My entire life. I just keep very low. I keep my expenses low so that I can take risks, so that I can keep getting up to the plate. And guess what? If I swing and miss, well, okay, it's not that much money to cover rent for the month and groceries. Now I know
that's a good mindset, because so many people are so scared of entrepreneurship. And I think you've instilled a lot of faith in them that they can go and do something that maybe they've been terrified about doing for 10 years. So take action, take advice, listen to Bridger. It's true. It's true for me. It's true for Thomas. It's true for everybody we talk to. I mean, you're hearing these stories repeat and repeat as we bring on different guests to the Funded Today podcast. So I love that. That's powerful, Bridger.
Yep.
Thomas, any other parting final words, commentary?
I would add this comment. I was going to say it earlier. I don't want to be contrarian, but my viewpoint's a little different. So I'll just share another viewpoint.
Perfect.
Bridger, you said when you met with your dad's business partner at his house that he said he looked around and he said the people who have funds are wealthy. I believe that's true, especially if you grow a fund. And in my opinion, how I understand it, and I've never heard anyone else really share this or say this, but to me, the way somebody gets wealth, right, where their wealth can grow beyond what they just bill hourly, is you have to have equity in a business. Now, for an investment fund, you have exposure or equity in those returns that are above the pref, that are above what the investors get and above your operating costs. So as a fund grows, as the business grows, as the profits grow, and you take dividends, you take home money, either yourself or with other business partners, you're making money. And so you are able to make money based off of the collective work of other people or technology or whatever the case might be. And so while it's true that Ray Dalio, I don't know the number you shared, it's like, hey, he made or took home $2 billion. It's like, well, if you compare it to, say, Jeff Bezos, the CEO and founder of Amazon, well, $2 billion is a good day for him, what he might make, So I kind of look at it and it's like, but again, that doesn't mean like, oh, you go start an e-commerce business and you're going to be wealthy, right? Because on the same token, it's not just go start a fund and you'll be wealthy. Obviously, like Zach, actually, this was on a different call, but as Zach was sharing, the secret to work is work. If you keep working, if it's not working, then you pivot, you try something different, but you keep working. It's the persistence. And so if you do that, but at the end of the day, it's owning a business. It's having equity in a fund, whatever it might be. And I went to law school and it's like, okay, yeah, attorneys make a lot of money, but it's like, well, wait a second. Actually, you don't make a lot of money because, yeah, you might go bill $300 an hour, but you're only going to take home 1/3 of that. So really, when you bill, you're going to be taking home $100 per hour. And it's like, okay, well, if you were to bill 40 hours a week, and to actually bill 40 hours would mean you would need to be working 45 or 50 or more hours per week. You're only making $200,000. Now, I'm not saying that's not a lot because that's a lot of money by any measure. But relative to the partners who are making $3 million or $6 million or whatever the case might be, it's because they've grown a firm. They have a whole bunch of associates who are working under them, and they're making money off of all of their billables, right? Again, it's having equity in a business. And that's why do you invest in real estate? Why do you invest in stocks? You're getting equity in those assets. And as those grow, you make more money. But with a business owner, if the business takes off, or with the fund, if the fund takes off, if it grows and continues to grow, your exposure, the amount of equity you have relative to the value is just going to be so big. So,
and Thomas,
Thomas, my argument there is and no, I agree with you too. And when I was looking at the vehicles, right, and I agree with you, owning a business is how most people create wealth. But I was looking at what type of business do I want to own? And I would say, to revise, I usually say this in my webinars, but fund managers and tech founders, at least you see, are on the top, like Forbes list, 100 people. That's who's making all the money, right?
Exactly. Yep.
And so my idea was, well, if I'm going to run a business, if I'm going to go all out, if I'm going to swing for the fence, I don't want to swing for the fence on like a restaurant, because restaurants have, they don't, even if you're doing very well, you're not making that much money on one restaurant or two or five, or, I'd have to really, scale this to a huge, massive level, maybe IPO to do anything like that. So that was picking a vehicle that's easier to make money was kind of what I say. But I totally agree with you with the, and it doesn't matter. I don't care if you own a fund or not, or run a tech company. I think just owning a business in general is the best place to start. Just get in the game and start swinging.
All right, Thomas, Bridger, I'm going to make you both happy. It's a little bit of a stretch, but this is from episode 11 of the Funded Today podcast, Markets Matter Most. Let's just give a different definition of a fund. Essentially, when you participate in the market, you're essentially part of a fund. Like Funded Today is part of this crowdfunding fund, and that's where we draw all of the revenue from Funded Today from. If you're part of the stock market, you're part of the larger S&P 500 or the NASDAQ or the Dow. Essentially, we're all participating in these markets for these funds, indirectly or directly, depending on how you formalize things. And so, I don't know. What do you
think? Not bad, yeah. I mean, yeah, it's I use it as a broad definition as well in there. So,
all right. Well, this is awesome. Any other final words or commentary?
You mentioned before how to kind of reach out to us. If you want to learn more, we have Investment Fund Secrets is our podcast. So
we'll link
we
to it in the show notes as well.
Fund managers. We specifically talk about how to launch and scale a fund. I have a live, webinar, hour training. We go through all of this, how I launch my funds and how, you guys can do the same. We have different programs, like a mastermind program with all these different mentors that come on and teach, and they give back essentially to help you launch and scale a fund. So anyways, you can find me investmentfundsecrets.com or Bridger_Pennington on Instagram is a great way to find me. Just shoot me a DM. I usually respond to almost all DMs right now. So anyways, that's a good way to find me. And then also be watching, I think Zach and Thomas, we got some fun stuff coming out with you guys, little partnership we got going on with your guys' new program and book and course and stuff. So that should be fun to watch.
Absolutely. Which leads us perfectly into our favorite segment of the show. This is the Funded Today Products of the Week. Bridger, give us a pitch on Investment Fund Secrets. I love it. I'm a part of it. Obviously, I joined your fund. Tell us a little bit about what it is, why it's great, what they can do to learn a little bit more about you. This is your chance to shine. Give us the elevator pitch.
Yeah. So like I mentioned before, I have my dad who runs, co-founder of a $20 billion family of funds. My brother, securities attorney, $300 million fund that he works at. And I've been able to launch 2 funds. So we thought, we've been hit up by a lot of people asking, how did you guys do this? None of you guys worked on Wall Street. None of us have worked on Wall Street. None of us went to an Ivy League school. We're just regular Joes, you'd call us, that have just figured out how funds work. So what we decided to do is put together a program and content online to help people launch and scale a fund without going to Harvard or Ivy League school, to do it the entrepreneurial way. So what we've done in our high level mastermind program, I have 6 mastermind mentors. Some of them run $100 million and even $1 billion funds currently right now. And they want to give back to the next generation, kind of like you guys with your stuff, want to give back to the next generation of entrepreneurs, want to help them. So they come on and mentor our select group of people in our mastermind program to help them launch and scale funds. We've had a handful of people already launch multi-million-dollar funds already. Some of them in the tens, even $20 million range right now. And it's been pretty cool to be a part of and launch. And so that's the quick elevator pitch. That's in our mastermind program. We have other smaller programs you can reach out and learn more about. But we want to expose this secret world of funds. Not a lot of people talk about it. Nobody mentions how to structure it. I can't even find content or books online to do this. We are having to build the whole model and process.
Are you saying a book's coming, Bridger? You going to be an author here soon?
Give me a year or two.
All right.
Books are hard to write, as I've heard.
That's what Thomas and I said, and it's been 3 years now.
Yeah, I've heard it's awesome. A lot. So I'm going to spend my efforts doing other things first, and we'll put together a book eventually. But that's kind of the.
We'll link to that in the show notes. Investment Fund Secrets. Thank you, Bridger.
Yep.
Which leads us perfectly into my product of the week. Funded Today, the book. How to raise big money for your next big idea. This baby is finished. It is nearly 400 pages, but it's good. It's like a story. You're going to love it. It has been going through the ringer the last 3 years. We've been in editing the last 6 months. I think it's going to be the most incredible book ever written on crowdfunding. I know that sounds a little audacious to say, but I wrote it. I can say it, right? It really is amazing. It's not going to cost you very much, maybe $20-$30. Let me know if you want to get on the early bird list to that. We will be launching probably within 30 days. So Bridger's going to hold me to it. Funded Today, the book. Yep. More details coming soon on that. And that segues perfectly into Thomas's product. Thomas, tell us about the video course that we are actually partnering with Bridger on. It's also going to include 8 weeks of kind of like what Bridger does with his product. We're going to bring in the experts. We're going to bring people that we've worked with that raised millions of dollars. Thomas and I are going to come on once per week. We're going to have a live session, kind of like on Zoom or a webinar, where we're going to talk with the experts. We're going to share secrets. We're going to get into everything. We're calling it crowdfunding secrets. Thomas, anything else you want to add on that?
I think you just said it all for me, actually. Thank you. Check it out.
I was too excited.
Valuable. If you're looking at launching a crowdfunding campaign or exploring your idea more, check it out because this will be super valuable.
Awesome. Thank you. All right, Bridger, thanks so much for coming on the podcast. This was awesome. I think Funded Today Nation is going to absolutely love this podcast. Appreciate you coming on, man.
Thank you so much.
Till next time, everybody. Don't wait until tomorrow. Get funded today.
Funded Today is the worldwide leader in rewards-based crowdfunding on Kickstarter and Indiegogo. Combined, they have raised over $200 million and counting for thousands of new ideas and inventions worldwide. If you've got an idea for a new product or invention, visit fundedtoday.com to speak with one of their experts.